right after Warren Buffett sold 50% of his Apple shares at the all-time high. We saw the crypto market absolutely nuke, dropping 20%, 30% for a lot of different projects across multiple different sectors. However, within the past 24 hours, we saw that dip get bought up very, very quickly with institutional money, and everyone is wondering, is the bottom in, or is this just a recovery rally before the markets get nuked again to the downside? So in this video, we have to talk about what the Federal Reserve is doing tomorrow to inject liquidity back into the markets, what this means for the Fed balance sheet, expectations for the federal funds rate coming up in the next month. We have to talk about the Dow Jones Industrial Average, global liquidity compared to Bitcoin and how this is going to affect the rest of the crypto market, what a Japanese investment and consulting firm that's like a mini MicroStrategy is preparing to do that is not what you think. Also, what's happening over at Swift with their employees switching over to Ripple. Ripple's recent market report that shows us where we need to be focusing our energy, our attention, and our money moving forward. And then a few projects that we are extremely bullish on for the rest of this market cycle. That way, when we go into the belief, thrill, and euphoria stage of the market, you can make the most amount of money possible. So if you guys are feeling bullish, comment 777. If you're feeling blessed, comment 777. And as always, if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So looking at cryptobubbles.net with this recent bounce that took place within the past day, the most important thing to note is which projects are bouncing the hardest with this buy up right now from institutional money coming into the markets. And these projects are most likely going to be the ones that are going to perform well, very well the rest of this bull run. So as you guys can see, Notcoin up 27%, Akash up 18%, Sui up 11, Render up 12, Solana up 10, WIF up 11, Tau up 12, Flare up 12%, and Core up 10.6. And then you got Bonk, Floki, Gala, Jupiter, and then Toncoin, and a bunch of others. And so we're going to dive into some projects in this video because Warren Buffett obviously is privy to insider information. He knows some stuff that was going to happen before it happened. And that's exactly why he was able to, sell the top of Apple. And as you can see, this pullback that took place, it even got bought up for Apple. We saw a sell-off down of about 17%. That's not the craziest sell-off in history, but it is a pretty steep one nonetheless. If we connect that sell-off that happened on the 23rd of March of 2020 with the 3rd of January, and then simultaneously the 22nd of April to form this ascending support, this is the support that we need to watch, because as long as this stays intact, then the bull run is still on. I think where things would become troublesome is if we broke this ascending support to the downside. Simultaneously, the 200 SMA that you could see right here, Apple has stayed above it for a long period of time. The last time that came back down to backtest it was 2018. So this 200 SMA in red is like the Berlin Wall right there. So if that breaks, then all hell would break loose in the markets. However, I don't think we're there just yet. And I do think the Fed is going to pump the markets to new all-time highs. Now, again, I'm not a financial advisor. These videos are purely for educational, informational purposes only. I'm not going to tell you what to buy or sell. I'm just going to tell you what I personally do with my money. But that doesn't mean that you should do the same thing with your money, because investing is very, very risky. You could lose money in these markets, especially with the turbulent times that we're going through right now. However, there's massive opportunity if you know exactly what you're doing. So the purpose of these videos is to always help you do your own research. And so when we look here at what the US Treasury is planning to do, they're going to begin buying back about $46 billion in government debt starting tomorrow. So the Fed printing machine is back. So this announcement just came out today, and it's going to go into effect tomorrow between 1:40 p.m. and 2 p.m., where the maximum purchase amount is going to be about $4 billion of 1 month to 2 month treasuries. Then they have another buyback on the 15th of the month, about $2 billion. Then another buyback on the 21st, about $500 million. So this is going to continue all the way through what looks like October 31st. So this is massive, because when you guys look right here at the Fed balance sheet, they have been issuing QT, quantitative tightening, since what looks like May of 2022 when they started tightening on their balance sheet. Now, right here, you can see this little blip where they had to add to from collapsing during that Silicon Valley bank collapse. So the Fed will not tighten forever. And they've been tightening since that period right here, which was the 20th of March of 2023. So for over a year and a half, they've been tightening their balance sheet while simultaneously keeping rates flat at about 5.33% for the effective federal funds rate. So the real question is, will the Fed come out earlier than their next FOMC meeting, which is in 42 days, and issue an emergency rate cut? Or is this just a big nothing burger because people are just simply overreacting from Japan raising their interest rates, which caused an initial shock in the market? Or is this just the tip of the iceberg for a much bigger crash? Well, look at this. There was a massive shift in expectations on the CMEgroup.com showing 28% are now expecting only just a 25 basis point rate cut, whereas 72% are expecting a much larger rate cut, which means 100% expectations of a rate cut for the September meeting. But this is still 42 days away. So if something else breaks in the markets and we see another crash in stocks or in crypto to the downside, the Fed might have to come out and issue an emergency meeting or an emergency rate cut. So let's look at the Dow Jones Industrial Average and let's see if that's likely to happen, because we're still trading inside of this bullish channel right here. We did break below the 50 SMA in blue. However, we're still above the 200 SMA, and we got rejected from this ascending support with this recent buy up. If we look at the relative strength index, you can see that we're at 39. Look at the stochastic RSI. You can see that the K line is at 4. The D line is at 8, which is actually really good considering the fact that when we're below 20 on the stochastic RSI, or the closer that we get to 30, that's when institutions back up the truck and they buy up the dip. So what we want to see on the stochastic RSI is a bullish cross where the K line crosses above the D line in orange and then confirms by passing back above 20. Now, what would cause this? Well, it would be global liquidity surging higher. As you guys can see on this chart right here, the global monetary liquidity, the year-over-year percentage change, we are trending back up alongside Bitcoin's year-over-year percentage. You can see the correlation there. Whenever global liquidity increases, Bitcoin tends to increase. And whenever global liquidity increases, the stock market tends to increase as well too. Now, I know a lot of people will say that, well, isn't crypto supposed to be, decorrelated to the stock market because it's a new form of investing? Well, it's still a risk on asset. Stocks are considered risk. Crypto is considered even riskier. So if the stocks sell off, you better believe crypto is going to sell off even harder. But if stocks rally, you best believe crypto is going to rally even more. Now, while the vast amount of dumb money retail investors sold, institutions and smart money backed up the truck. For example, this Japanese investment and consulting firm, Metaplanet JP, which is basically a mini MicroStrategy, is preparing to acquire additional Bitcoin worth tens of millions of dollars, underscoring the crypto asset's growing institutional interest. So it's worth noting that on this document issued today, Metaplanet said it will use the majority of the funds raised from its 10 billion gratis allotment of stock acquisition rights to buy more Bitcoin. So it's about $69 million, which is not the craziest purchase, but still a good chunk of change. So they're bullish. And when you look at Total 2, which is the crypto total altcoin market cap excluding Bitcoin, you can see we wicked below the 200 SMA and we're hovering right at the 50 SMA right now. So I would expect us to rally into this news of the Fed pumping liquidity in the markets, but I would expect some resistance roughly right around the $950 billion zone. And so the real question is, if we see this V-shaped recovery and for the markets to start working its way through here to basically break the high of the year, or if we face resistance at roughly $950 billion and then continue to the downside back down to the 200 SMA. Either way, I think right now is incredibly bullish for what's about to happen over the next week to 2 weeks. So make sure you guys are subscribed to the channel because we're going to be revisiting this chart right here within the next week or two to show you where we're at and the most likely scenario to happen next. But in the short term, I'm bullish right now. And when we look at some fundamental news, it's absolutely remarkable that at least 4 longtime Swift employees have switched to Ripple and not the other way around. Each of these employees spent years at Swift. You can see Marcus Treacher was about 6 years. Siva Kumar, I'm going to butcher these names, was about 7 years and 9 months. Ravi Subramanian, 9 years and 6 months. And Marjan Dalantin, 11 years and 2 months over at Swift. So why are they moving over to Ripple? They know something that the masses don't know. In my opinion, they know that Ripple is going to be replacing Swift. Now, I've been in a lot of marketing companies in the past, and anytime you see a vast amount of employees leave to something else, they know that what they're in is either a sinking ship or there's a better, faster ship that's going to get to the destination much quicker. And that's exactly what Ripple is doing. So when we look at the recent 2024 XRP market report, the state of the XRP ledger, they are enhancing the interoperability with the Axelar bridge through their EVM sidechain. Last quarter, they announced this as the exclusive bridge to source the native gas token of the sidechain EXRP from the XRP ledger. They partnered with Axelar to leverage their related sidechain benefits while providing a secure and efficient bridge for users. But here's why this is important and the reason why you need to pay attention right now. Because what they're going to be focusing on doing with this is bridging other fungible tokens to and from XRP Ledger's mainnet, as well as from 55 different blockchains in the Axelar network. So this is going to drastically enhance the functionality of smart contracts in DeFi applications because oracles are going to enable a wide range of use cases from price feeds to event data, making them an essential tool for institutional DeFi. So that's the keyword I want you guys to focus on for this video is institutional DeFi because the financial landscape is rapidly evolving and the decentralized finance sector is at the forefront of this transformation according to Ripple. As institutions look to harness the power of DeFi markets, practices and protocols will require them to have a robust, secure, and efficient platform that can meet their complex needs. So, and as the blockchain built for businesses, the XRP ledger is uniquely positioned to serve as the foundation for institutional DeFi. Now, another company that is pioneering this space with TradeFi exposure to digital assets in Web3 is called DeFi Technologies. They are the parent company of Valor Inc., and Valor actually issues exchange-traded products that enable retail and institutional investors to access digital assets like, Bitcoin and even other cryptocurrencies like XRP, BNB, Atom, AVAX, Solana, Polkadot, Uniswap. You can see that they have Link, Internet Computer, Toncoin, which is the cryptocurrency for Telegram, Core, which is one of the biggest performers of the past 24 hours, Near Protocol, which I'm extremely bullish on, Engine, HBAR, Bitcoin, and Ethereum. They're able to offer fully hedged digital asset ETPs with low to zero management fees with product listings across European exchanges, banks, and broker platforms. And of course, their flagship products are Bitcoin Zero, Ethereum Zero, the first fully hedged passive investment products with Bitcoin and Ethereum as the underlines, which I think is absolutely awesome. And that's why we chose to have them as the sponsor for today's video, because they allow institutional grade exposure to digital assets through ETPs, strategic ventures, and critical Web3 infrastructure simply and securely via a brokerage account. So if you guys go to DeFi.tech, I'll also leave the link in the description below for you to check them out. They're currently trusted by millions of investors around the world with over $500 million in assets under management. So this is no small company here. DeFi Technologies is the parent company of Valor Inc. And Valor is the one that offers ETPs listed on regulated stock exchanges across Europe. And they launched their first ETP, which was Bitcoin Zero, in December of 2020. And DeFi Ventures is working with leading names across the DeFi space, and Web3 focusing on pre-seed to Series A ventures. So this is some big business moves, guys. And I'll show you their chart in a little bit with the ticker that you can see on the screen right here. You can go type that into your trading view or your brokerage account. But their story is that they believe that traditional investors should have the opportunity to invest in digital assets, including cryptocurrencies, in a trusted and secure manner without creating a separate brokerage or a bank account. So DeFi Technologies is the publicly traded company traded on the CBOE Canada, founded in 2020 out of the need for better, more secure access to decentralized finance. So keyword is DeFi. Valor offers the exchange traded products, and DeFi Ventures invests and incubates the most promising blockchain protocols and applications that are widespread throughout institutional investors. So the company has increased their Bitcoin holdings by purchasing an additional 94 Bitcoin recently, bringing the total to about 204 Bitcoin. So I think that's like $11 million. And they also added Solana to their treasury, acquiring about 12,775 Solana tokens. In addition to Core, which is the cryptocurrency that is bouncing pretty hard right now over the past 24 hours, the company purchased about 1.4 million Core tokens and plans to participate in their staking facility, which enables yield opportunities and contributes to network security, further diversifying the company's income streams. Because as you guys can see right here, Valor's existing product range includes Uniswap, Cardano, Polkadot, Solana, Avalanche, Atom, BNB, XRP as well too. Toncoin, ICP, Chainlink, Core, Near, Engine, all incredible projects. Of course, HBAR is on the list as well too. And Valor Inc. also announced the launch of the world's first exchange-traded product for the Near Protocol token, which is massive. This is on the stock market over in Sweden, providing secure and diversified exposure to the Near ecosystem. And the reason why they did this is because Near Protocol supports decentralized applications in the DeFi and NFT sector with high scalability, low transaction fees, and interoperability. Near is actually one of the projects that I'm the most bullish on that I actually do hold in my portfolio. So this was a very smart move by them. Now, if you guys know Anthony Pompliano, he's a big Bitcoin bull. He's also a shareholder of DeFi Technologies. He works with the company and he advises them as well too. Listen to this audio right here that he sent out from one of his newsletters.
The SON conference was yesterday. This unique event brings together some of the world's greatest investors to pitch their best investment ideas while helping to raise money for philanthropic causes. Some of the picks from yesterday's conference included Carpenter Technology Corporation, Natera, European chemicals company Solvay, and cryptocurrency Ethereum. Each of these picks has a solid thesis behind them, but I think they will be drastically outperformed by the stock that I would have pitched yesterday if I was at the conference. My pick would be DeFi Technologies. Let me explain my logic. The publicly traded company has a few different products or services across the cryptocurrency sector, but there is one area that is worth truly understanding. DeFi Technologies has a subsidiary called Valor Asset Management. This organization's strategy is to create ETPs in non-US markets for the long tail of cryptocurrency assets. The thesis is that investors in traditional markets and on Wall Street want exposure to potential 10x to 100x opportunities just as much as the degens of crypto do. If Valor can be the first company to provide public market exposure to these assets, they will be able to attract meaningful capital to their ETPs. But that is when things get interesting. Because Valor is holding crypto native assets in these ETPs, they are able to generate higher fee revenue from these assets. Instead of charging less than 50 basis points as we are seeing for the Bitcoin ETFs in America, Valor charges 1.5% or higher to manage the more esoteric assets. Additionally, many of the assets give Valor the ability to generate yield from staking or other crypto native revenue opportunities. Lastly, Valor periodically engages in market making for these assets, which can generate additional fees. By my calculation, Valor's average fee generation on their AUM is approximately 7.2%. That is a monster number for the asset management industry. This understanding alone would make DeFi Technologies and Valor an interesting potential investment. But you have to remember that these ETPs they manage are holding crypto assets, which Solana being the largest ETP, so the asset values continue to grow rapidly during a bull market. For example, here's an excerpt from the company's recent earnings report. Quote, assets under management grew 476% to approximately $508 million Canadian as of December 31, 2023, which is up is up from 106 million in December 31st, 2022. Valor Inc. and Valor Digital Securities current AUM stands at 880 million Canadian. This means that Valor's AUM has grown more than 800% from December 2022 till today. There are very few businesses in the world who can see this type of revenue acceleration without having to expend an insane amount of money on sales and marketing.
So if we look at DeFi Technologies with the ticker DEFTF, we can see that they're sitting at $1.40. They're up over 4,500% the past 5 years with an all-time high of about $3. If we look at the chart right here, they're in a healthy uptrend since October of 2023 with the rest of the market. Now, the cool thing is they're still off from the all-time high, which is great because this is simply the disbelief rally in the psychology of a market cycle that you can see up on the screen right here. Happens after disbelief. Of course, if the whole world doesn't melt down, we're not in World War III, which obviously you have to be ready for, but comes hope, belief, thrill, optimism, and then euphoria of the market cycle. And so if we were to draw the Fibonacci retracement tool from the all-time high to the low, which is about right here on the 21st of August at about 5 cents, a 1.618 is about $5.65, whereas a full extension is about $14.78. Now, no, I'm not saying that this stock is going to go to that price point, but what we can do is look to see on key indicators like the stochastic RSI if we are overbought or oversold, so you can understand what to do with your money as you make your own educated decision here. Because if we look at the D line, we're sitting at 16. If we look at the K line, we're sitting at 15. We just recently saw a bullish cross take place on the 15th of July. We're still below 20 right here. So this bullish cross is not 100% confirmed because it looks like we're attempting a bearish cross below 20, but we are oversold in terms of the momentum here, which is actually great news because if the whole crypto market continues to the upside, then I actually think this project could do very, very well. So it's definitely something you want to keep on your radar this entire bull run. Go check them out at defi.tech. Link will be in the description below. And again, shout out to them for sponsoring this video because in my opinion, it's very, very smart to diversify because what I see a lot of people do is come into the industry and they just dump all of their money into one project. Like for example, XRP. Even though I'm bullish on XRP, look at how XRP has been underperforming the rest of the market. There's been so many other projects, like Near Protocol, Solana, Chainlink, other projects that I've done very, very well with, whereas XRP in my portfolio has been underperforming. Now, I think that's going to change towards the end of this bull run, but in one of my previous videos, I showed you guys on the stochastic RSI how XRP is actually overbought right now. We just saw a bearish cross take place above 80 on the stochastic RSI, not on the daily, on the weekly. And so this was a cause for concern because I was calling this out at about 65 cents. Right now, XRP is at 50 cents. And so we are still trading in this macro symmetrical triangle. But in order for me to want to buy more XRP, I would want to see the stochastic RSI on the weekly down below 20 for me to consider backing up the truck for more XRP. So in my opinion, I do see XRP trading to the downside in the short term, and I'm going to keep monitoring this chart, bringing it up in these videos for you guys and showcasing what's happening on the stochastic RSI if we do in fact get a confirmation of this bearish cross by the D line crossing below 80, because right now the K line is below the D line at 71, but the D line is still at 86. We need to see this D line in orange cross below 80 to confirm this bearish cross. And if that were to happen, then we could see some blood to the downside for XRP. But that's good news, because when there are mass sell-offs in the markets like this, I'm not going to tell you what to do, but I'm going to be backing up my truck all the way to the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind, because I believe the spending power of the dollar is just going to keep going down in value. That's a fact based on inflation, blockchain technology, distributed ledger technology, decentralized finance, and cryptocurrencies have been going up in value. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. I will see you guys on the next video. I'll also see you on bullrunners.com, where you'll discover how to earn more crypto in less than 10 minutes per day with the #1 play to earn XRP game. So you can put your XRP to work for you, regardless of whether XRP goes up, down, sideways. You can learn how to earn massive crypto rewards by going to bullrunners.com, put in your best email address. You'll be instantly subscribed to our daily video newsletter to receive breaking news updates like this. So I appreciate you guys. I will see you on the next video. As always, you know what to do. Stay bullish.